In this video, we want to talk about Marvell Technology, and if you haven't heard or never heard of the company, it's kind of like that little brother to NVIDIA with regards to supporting data centers. Now, this is the monthly chart on Marvell Technology, and we had a huge buy level down at $36, in which price hovered in that area for several months before eventually pushing higher in May of last year, again riding the coattails of NVIDIA. Price almost hit what was all-time highs at $90 before pulling back, and right now price is just continuing to just kind of drift. Right, momentum still to the upside, but it's just drifting sideways. And if we scroll to the weekly chart, not the best level of interest in terms of price structure, but you do have a rally, basing candles and then a rally out, and so that is a level of interest that I'm going to pay attention to. Weekly buyers at $55. Now, the only thing I don't like about this price structure is this hammer candle, right? That wick is pointing down, meaning it's pointing down to where the real level of buyers are at. But nevertheless, one has to respect this level until it's breached and we see candle closes below it. Here was that candle I was referring to on the monthly chart on huge volume. Price comes back, respects that trend line before pushing higher. And now what we have is some volatility dampening. Right, so a breakout is definitely inevitable. The question is, which way is it going to break out? Right. You are in a sideways market. Price is not making neither higher highs and higher lows or lower lows and lower highs. It's just sideways. However, I'm going to give you two reasons to potentially look at Marvell. So they could see demand for its semiconductor solutions explode over the next few years. Marvell's products are used in a wide range of goods, from game consoles and printers to enterprise workstations and AI servers. But data center, including AI-related products, is its largest business, totaling 40% of its revenue last year. Now, Marvell reported a year-over-year decline of 12% in revenue in the fiscal first quarter, but it is just starting to see a recovery after a weak year of demand across some of its business segments. The reason to buy the stock now is the growth in Marvell's data center business, where revenue nearly doubled over the year-ago quarter. Marvell is meeting a crucial need for AI-optimized data centers. Marvell believes it has plenty of opportunities to expand its addressable market across AI compute programs, interconnect switching, and storage solutions. Management previously guided for AI-related revenue to reach $1.5 billion this year, or nearly 30% of the total revenue, before growing to $2.5 billion next year. Now, Wall Street is becoming increasingly bullish on Marvell's prospects. The average analyst expects the company's earnings per share to grow at an annualized rate of 34% over the long term. This is up from a low-digit estimate a year ago. Now, the stock's recent advance has brought its forward price to earnings ratio to a more expensive 50 multiple. However, the company should be able to grow into the stock's high valuation. For example, when you consider next year's earnings estimates, the stock's forward PE drops to a more reasonable 28%. So that's how Marvell looks from a valuation standpoint. I just gave you the technicals. The question is, which way are we going to break out? I would love for price to break out to the downside, and that would be a great opportunity to go long. Again, you do have weekly buyers at the $55 level. Thanks for watching. Subscribe. Please like the video.